Hello everyone, welcome to my channel. My name is Boston Dave Knight, longtime real estate investor, real estate broker, founder of Rent Smart USA Property Management. And in today's video, we're going to discuss how to get started in real estate investing. All of this and much, much more coming up next. So you want to get started in real estate investing. There's so many factors involved. First, we need to consider what your goals are. And, well, where are you at? I mean, what's your current situation? I'm sure some of you have never even bought a home before. Some have retirement funds or savings, and those people want to figure out how to put that money to use in real estate. While others have very little money, bad credit, or maybe even unemployed. So today, I'm going to discuss some options for each and every one of you. Now, some of you may be saying, well, geez, Dave, I don't know how to get started. I've never bought a home before. Get it? So here's some advice for you, especially for you first timers. So when you buy a property, you want to make sure you buy yourself a home and a house. Doesn't make sense. Well, yes. A home is a place where you live, a place where you raise a family. A house is an investment property. Let it give you a double purpose. Here's why. So if you buy a home and only plan on living there for a short amount of time, then you have the option to move out and turn it into an investment property. And I strongly recommend doing this. Now, for many of you, that first property, you'll need to get three things. So here are those three things. Number one, you need to qualify for a mortgage. You need a job that you can hold for at least 2 years. And if you're in college, the banks will count all those years spent on working on your degree towards your actual work history. But you have to get a job in that field. So you'll need a 2-year minimum of work history. Now, the next thing you'll need to build a good credit score. So I recommend getting 3 credit cards. You need to show that you've been responsible with 3 different revolving lines of credit. Just make sure you pay those credit cards off monthly. You don't want to carry a balance. And you don't want to pay those high interest rates. I mean, those credit card companies will rob you. So, why should you have 3 credit cards? Again, I want you to build a positive credit history, a positive credit score, and we're looking for 640 and higher. The higher the credit score, the better interest rate you can get for a mortgage. And at this time, believe it or not, you can get a fixed rate mortgage for under 3%. That's incredible! And then the third and final thing you need to do is save up a minimum of 3% for that down payment. Yes, FHA mortgages, 3%. Great product. Now, if you're talking about a $100,000 to a $200,000 house, then all you need to do is save up $3,000 to $6,000. Pretty simple. Also, there are first-time home buyers down payment assistance programs out there. Check with your local mortgage broker or your realtor for details. I also suggest that you have an additional $10,000 for closing costs and minor repairs. So now you have 2 years of work history. You've got 2 years of payment history on those 3 credit cards, and you've saved up for that 3% down payment. Time to take action. You got to go home searching. You want to search for homes in decent neighborhoods with decent schools. Folks, no war zones. Stay clear. I want you to buy smart. You have to get a good deal on this home. So when you want to move, or when you want to move up, you can move out and turn it into a rental. That's if you're not tied down or scared of moving. Then you gotta go out and buy another property, possibly a duplex or a threeplex. This way, the tenants pay the mortgage and you live for free. Wow. For a very good reference on what type of house and what type of neighborhood that is advisable for you to invest in, you can click right up here. Watch my video where I can explain it to you in detail. Okay, now you own 2 properties and you come out of pocket, say $10,000 to $15,000 for each one. And if you buy in an appreciation market, or shall I say, and if you buy in an appreciating market, your property can grow in value. And in many markets across the US, home values have doubled since the crash of 2008. Now here's the deal. You gotta buy at the bottom of a market, not at the top. This appreciation is called equity. Equity is the fair market value of your home minus what you owe. So if you owe $50,000 and your home can sell for $100,000, you now have $50,000 in equity. Now, for those of you who have substantial savings, such as a retirement account or an IRA, you may be asking yourself, well, geez, Dave, I want to invest in real estate, but I really don't know where to start. I get it. Plus, I've got all this money tied up in a 401k or in my IRA. So how can I use it to purchase investment property? It's a good question. Well, you can use that money and focus on putting 20% down on investment property or properties. Okay? So what you're doing here is simply shifting money from one low performing asset and putting it into a high performing asset. Now, French economist J.B. Shea is known for saying that building wealth is nothing more than moving from low yields to high yields. If you have your money invested in 401ks and in IRAs, your return after paying management fees to these accounts are roughly 3 to 4%. And folks, guess what inflation is? Exactly 3 to 4%. So you're actually making nothing. And most of you know that the stock market is inflated by the Federal Reserve. They continue to pump it up and pump it up. And the stock market will crash, just like in 2008 and recently 2020. And when it does, you can lose just about everything. So if you're really looking to make 6, 10, 20, 25% return on your money, you can get that. Yes, you can. How do you do it? You can tap into your accounts and acquire rental properties, obviously at a good price. Never overpay. And I suggest that you place 20% down. So here's a rental home. Let's break it down. There's a rental home listed at $200,000 and it fits your criteria. Let's analyze the deal. First, figure out how much cash do you plan investing into the property. You'll need a down payment of 20%. That's $40,000. Then you mortgage the balance, which is $160,000, plus some minor repairs, closing costs, bringing your cash invested into the deal at $50,000. Next, you'll need to calculate net cash flow. The home would be rented at $1,700 per month. That equals $20,400 annually in rents. Then add up the annual expenses associated with the property, like yard care, maintenance, and anticipated repairs. Now, those expenses would total $3,000 per year. Then calculate the annual debt cost, a 5% loan on $160,000. That equals $8,000. This means your total annual expenses are $11,000. $3,000 in expenses plus $8,000 in debt costs. Your annual net cash flow would be $20,400 in rents minus the $11,000 in expenses. That would equal $9,400. In this example, your cash on cash return is 18.8%. That's unbelievable. This means your property's annual profit for that year would be 18.8%. Folks, Try getting that return in the stock market. It doesn't exist. Now, for those who want to get started in real estate, but have no credit cards, no job, or very little money, or bad credit, what can you do, right? Believe it or not, I was once in this position, and I wanted to share with you how I started. I just finished college. I was working in a gym doing sales, making about $500 per week. My credit was all banged up from running up charges on spring break. I had a blast, what can I say? However, I wanted to own a home. I didn't want to rent. So this is what I did. I approached a family member who had lots of money in the bank, and they were willing to invest in me. They were willing to co-sign a loan. Next, I hired an investor-friendly realtor. We then searched for distressed homes that were on the market for a long, long time. I tell you, I must have looked at, say, 50 plus homes. And I had to find the right deal. And I found a property that was on the market for 2 years. Believe it or not, 2 years. The family had moved out of state. They were paying 2 mortgages. And they were very motivated to sell. You see, the problem was they did this poor renovation to the home, and it really turned off practically, obviously, all the buyers. That's why no one wanted to buy it. I saw through this and was willing to do the work myself. And luckily, my family member paid the down payment to get the home and lent me the $20,000 for the renovations, which I did after work and on the weekends. I struggled to pay the mortgage, and after 6 months, it was ready for me to rent it out. What did I do? I rent out the rooms. I brought in roommates. This is called house hacking. Greatest way to get started in real estate. I lived in the basement and rented the 4 bedrooms upstairs to guys that paid me $400 per room per month. My mortgage payment was $1,200 and the rents totaled $1,600. So that was a monthly cash flow of $400. Fantastic, I know it. I was living for free and my roommates were paying my mortgage. What a deal. Got to do it, house hacking. So I paid my family member about $500 per month, and over time I paid off that $20,000 renovation loan. Now, here is where I made my money. I bought a distressed property with equity at the bottom of the market. And within 5 years, the value of the home nearly doubled. So this is what I did. I did a cash out refi. A cash out refi allows you to pay off an existing loan, start a new fixed rate loan, and give you cash from the equity of the home. So I paid off my family member and took the cash from the refi and bought a duplex. I quickly moved out of that rental home and moved into the duplex. The unit next to me in this duplex paid for the mortgage, the rent paid for the mortgage, and so I lived there basically for free. So at this time, I owned 2 rental properties. I basically started with nothing. You can do this too. All I had was a plan, and I was willing to do the work to make that plan happen. So the question is, are you ready to get started? If so, all you need is a plan and the mindset that you can succeed. You've got to stick to it. You've got to make it happen. So whatever you do from here on, it's totally up to you. I'm sure that you'll take action. In fact, the smallest action you could do right now is just subscribing to my channel. Ring that bell so you receive that notification every time I upload another video. I want to share my knowledge with you. I want you to start learning how you can do this. So, thank you for watching. My name is Boston Dave Knight, and I wish you all nothing but success. God bless. I'm out.